My name is Obasi Emeka Fortunatius. I am PMP certified and I'm also a chartered accountant. I studied petroleum engineering at the Federal University of Technology of Warri. I worked at IHS Towers as a service engineer for approximately 4 years. Right after the completion of my 4 years experience in IHS, I decided to join PwC. So I joined PwC in 2021 as an associate. I spent approximately 5 years at PwC. Right now, I am an assistant manager at PwC and I'm involved in end to end of the audit activities, the audit process from planning to completion. I did engagements at this moment. Then for some engagements that we don't have manager, I also serve as managers on those engagements. So the my work entails I'm in charge of the compressed areas, the accounting estimates, areas that are subject to uncertainties, and also I act as the first time reviewer of the audit work papers of my team members that before the manager reviews. The reason why I'm interested in this role is it will help me to it is an opportunity for me to to share perspectives to people from different walks of life and also experiencing auditing and international clients that also adds to my experiences, and I have no issues working across time zones. So this opportunity will help me grow professionally, be able to interact with people from different walks of life, different backgrounds, and also gain more experiences. Thank you. So provide response to question two. There was a time one of the engagements I did a couple of months ago. One of our team members that was assigned to notes payable, that's loans, went on exam leave. So I was asked to take over his responsibilities. So I reviewed the loan agreement, and I noted that the loan was not recognized in line with IFRS 9. It was not treated at fair value. So because it was a restructured loan, which means that there should be fair value adjustment, there should also be day one gain adjustment because it was a restructured loan and the loan was given at below the market rate. So I brought it up, and we only have like 2 weeks. Yes, just 2 weeks left for the end of the audit. So I had to bring it up. I told my manager about it. So I was asked to do the computation and also propose the relevance adjustments, which I did. So I didn't hide that material facts, even though it may affect our audit timeline. So I brought it to the partner was also involved at the end of the day. We told the clients, and the clients acknowledged the fact that yes, the loan was not recognized at market value, so we needed to adjust for the loan and also recognize it properly. So at the end of the day, we proposed adjustment and the client accepted the adjustment. That's on one side. Then I also had a team member on that same engagement that needed some form of support. So I assigned a experienced team member to provide coaching, because as auditors we work as a team, and the success of the audit depends on the success recorded by each of the engagement team members. Thank you. So to provide responses on question three, so the engagement, it was a client in the downstream oil and gas sector. So I was the engagement team lead. I was the team lead on the engagement. So what I did to ensure that the engagement was successful at the end of the day was right from the beginning of the engagement, I made sure I checked all the financial statement line items and also proposed a number of teams and also their skill level. I requested for two senior associates on the job, two associates, then one intern, based on the engagement circumstances, so that we will meet the deadline and also deliver quality at the same time. That is one of them. From the beginning of the engagement, I made a list of all the audit requirements, at least the general ones, and sent out to the clients on time so that they will begin to provide us with those requirements, which they did, and we have meetings with the clients 2 times a week, bi-weekly, to ensure that we are on track, and also to let them know what they are, what the pending items with them, that's depending on all the requirements with them, that will help us close out on the audit. And I ensure that any challenges or any issue we noted at that time, we are escalated to the manager promptly. So, and I encourage my team members to speak up and not wait until the matter, for any reason they can't understand something, or they have challenge, that they should speak up immediately. They shouldn't wait, they shouldn't sleep on it, so that, because audit is time sensitive, so we don't have enough time to start addressing issues. So it's better when issues are addressed on time, so to help everybody, and I ensure all the team members were carried along. I made sure the environment was positive and collaborative, so everybody was able to speak up, share their challenges and at the end of the day, we were able to deliver the audit both on time and also on quality. So for question 4, for a non-profit audit, so for a new audit of a non-profit organization, so the steps that I will take, if it's a new client, maybe you've not audited the clients before, and we just want the client. So the first thing I will do is to do the client acceptance. Then after that, I also perform the engagement acceptance. So after the engagement acceptance, I will do initial audit engagement. That is, I have to go to the client and also obtain get the audit procedures that were performed by the previous auditors. That's initial audit procedures, and carry out initial audit procedures, testing the opening balances. So I'll test those opening balances, yes, obtain this document, or also send letters to the prior auditors, to confirm that there was no issue, and there's no material fact that they would want us to know as a new auditor. Then again, I'll do understanding of the client. I'll perform an understanding of the client and applicable financial reporting framework, as well as the environment that the client operates. So after that, I also do fraud risk assessment, maybe especially in terms of their grant and also their revenue recognition process. Then the business processes that we have, I will do an understanding of those business processes. And while doing an understanding of the processes, I will identify the relevant controls embedded in those business processes, which will form the key controls that we may test for our in our execute phase. Then I will also set the materiality threshold for the engagement. Yes, then also design the audit strategy and plan, so, and the audit procedures as well, which will include both the substantive and also the control testing. So in terms of the control testing, we have to be talking about the control, the liance, the extent of the control. Then for the substantive, are we doing target tests or not? What type of tests are we doing? What is the nature of tests we are doing? And also, what are the relevant assertions that those tests are addressing? The same for the control. What are also the relevant assertions these controls are also addressing at the end of the day? To provide responses to question 5, which has to do with misstatements. So when we identify several misstatements on an engagement that are individually small but larger in total. So individually small, maybe if they are below our sum, that's yes, call it sum, which is the immaterial misstatements. So if they are below sum, all we can do at the end of the day, we aggregate these deficiencies and also compare with the performance materiality. So if they are above our performance materiality, which I think is what they mean by what the question means by being larger in total, then we'll have to propose an adjustment and discuss with the client, so they have to either consider passing this adjustment. In a case where they refuse, we can leave the adjustment as uncorrected. So when we are also giving them representation letter, they have to include the uncorrected misstatements in the representation letter that management is going to give to us at the end of the day. So it's not just the materiality that we also consider. We also consider it's not just the it's not just the quantitative factor that we consider. We also check the qualitative factor. For instance, even if the amount is not material compared to the PM or some, we can check what is the impact on the disclosures. Are they key disclosures? Is it affecting a key disclosure? Does it have to do with non-compliance with laws and regulations, which can even have a long-term effect on the entity in question. So we consider both quantitative and qualitative factors, when deciding if we are going to adjust for these misstatements or not. And so when we are done with this audit, we communicate this misstatement to those charged with governance via the post audit report. We will have to do a presentation to the board, to the either to the management, to those charged with governance, or to the audit committee. So we make the presentation, we put it in writing, we state the adjustment and also the impact of these misstatements on the financial statements. So this is how we communicate to those charged with governance or the audit committee. So for question 6, which has to do with managing workload, especially during busy season, which is what we experience on every cycle. Yes. So what I do for me is the engagements. If I'm on 2 to 3 engagements, so I will know the risk level of those engagements and also the reporting deadlines. For instance, if it is a publicly listed entities which I know that they have tight reporting deadlines, I ensure I give more priority to such engagement. Then every day I have to-do list, because I'm on 3 different engagements, so I have to-do list to ensure that, and at the end of the day I will ensure that I tick all the boxes and make sure I complete what I have on my to-do list, because tomorrow there will also be other activities as well. And for some situations I might have to delegate to my team members if I have to focus on more demanding task, or there's an engagement that requires more attention. And if possible, I can also request for additional team members if that is the only option available at that moment, at least to ensure we meet the deadline. Then I had a situation last FY where one of my clients needed their signed financial statements for a bid, and it was it was like 2 weeks. They needed it in 2 weeks, unlike the 1 month that we earlier agreed. So, and we discussed with the partner, also discussed with the manager how are we going to meet this deadline. So I had to put that as I have to take that as a priority. I had to focus more on that particular engagement because I didn't want the clients to miss the bid, because they needed the financial statement and it was critical for them, at least for their business. So what I did was to request for additional team members on that particular engagement, and additional team members on that particular engagement, and I also focus more on the engagement, ensuring that whatever could stop us from meeting the deadline, were properly addressed. So this is how I manage the timeline, manage multiple engagement in terms of risk, the deadline involved, and also the nature of the clients in question. So to provide responses to question 7, which has to do with internal controls. So for the control strengths in the process, I think the approval of the ED for payments of the invoices, and also for invoice amount that is over $5,000 that has to be approved by the boss treasurer. So that's a good uh, control, internal control for the entity. So, and again, they have cloud accounting system and the digital documentation, which also helps for the audit trail as well. So to have a good audit trail, so that's also a good internal control that the client has in place. So talking about the control weaknesses, um, so we have the same person that enters the invoice into the system, the details of the invoice is also the same person that also does the bank reconciliation after payment, and also checks that yes, the payment is also approved, and also signs before sending it to the vendor for payment. So these are multiple roles performed by a particular person, and even the bank reconciliation that is being prepared by the um, the administrator, the coordinator, the admin coordinator is does not have any a second eye. Like there is no independent review of that bank reconciliation, which is a deficiency in control design. Then again, what could go wrong in this whole process is that there is subject to errors. Some errors might go undetected, and there's also a risk of fraud here. There's a risk of fraud. There might be an instance of unauthorized payments, and also the use expenses as it relates to grant. There might be misclassification of these expenses, and for the fact that there is no what they call it, for the fact that there is no independent review of bank reconciliation, that also shows that there could also be errors in terms of the amount that is recorded as well. When comparing the GL and what we have in the bank, nobody's checking that. So what I will do, the procedures I will perform as an auditor is first, some of those payments I have to check for approval. For payments that are over 5,000, I will check if the treasurer, the boss treasurer, approved the payment. Then again, I will do an independent bank reconciliation. I'll have to reconcile the bank and the cash ledger and the bank statements to be sure that yes, all the payments we are captured in the general ledger. And I think yes, then for some of the invoices, I'll obtain some of the invoices and compare the what I have, the physical invoices, and as against what was keyed in into the accounting software to ensure there was no error during that process. Yes, these are the procedures I will carry out as an auditor.